Hey folks, I want to do a little bit of myth busting around infinite banking loans today. Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. Now, I constantly hear misinformation or disinformation or confusion surrounding loans that people want to take either through their infinite banking policy or loans they want to take from something else and why they should or shouldn't. And often it stems from wanting to be a good banker. As Nash says in his book, you want to be a good banker. You don't want to steal the peas. If you've read the book, you know what I'm talking about. If you haven't read the book, Becoming Your Own Banker, there's a link in the show notes. Check it out. It is a very valuable tool in understanding how to be your own bank and how to use infinite banking in your life. In his book, he talks about stealing the peas, and basically when you're the business owner, if you own a grocery store, you don't want to take peas off your shelf and take them out the back door. You want to pay full price for them. You want to take them out the front door, go through the cashier so that you generate this atmosphere around your employees that they're not going to steal from your business either. They're not going to take anything out the back door. Everybody pays for it. And that's correct. Okay. He talks about how you pay whatever the retail rate is so that you generate the highest amount of revenue for your business. That's good too. The problem is that I see some people take this a little bit too far when they think that they should be borrowing from their bank no matter what. When they say, if you have the opportunity, if you're going to patronize your own business, you got to use your own bank, right? So they're viewing their bank as their own business. And even if they have the opportunity to earn a lower interest rate somewhere else, let's say they could borrow money from their HELOC at 3%, or they could borrow from their own bank. They could borrow from their own bank for 6%, which technically you're actually just borrowing from the insurance company. Now, some people like to push that you borrow from your own bank because you're patronizing your own business. And it doesn't quite work that way, okay? Nash's book is about control of your money. And there's this view that if you utilize the HELOC, now you're no longer in control of that money. Use your own bank, pull the money out of your policy and do that, and you're being a good banker. So this is specifically what I want to address. And I don't know where this disconnect is coming from, but I want to try to clarify this. While I've never actually been a banker, I have been being my own bank for a while now, and I have been a business owner, and I am a business owner. So the way I view this is, as a business owner, okay, as my own bank is a business, okay? So each business has its own hard costs. In this case, my bank, I know that I can borrow from it at 6% interest. Okay, now this is with the particular policy, right? I know it's at 6% interest. So I know that I can borrow at 6% interest. Let's view whoever's going to loan that to me as my wholesaler, okay? If I have the opportunity to use a different wholesaler and get that at a lower rate, I'm going to want to do that. That's what businesses do. We arbitrage. We look for the lowest rates, and we try and make our money going from buying the lower rate and selling at the higher rate. So in this case, I'm pulling money out for an investment. I can borrow it at 6% and earn 15%, or I can borrow at 3% and earn 15%. Which one are you going to do? Which one makes you a better banker? Well, the 3% one does, of course. Now, just because I choose to use the HELOC doesn't mean I'm not in control of the money, because I still have the cash value that I could have used in my own bank. It's just that I know my costs are a little bit higher if I use that. Now, if for some reason the demands from this other lender, if those change and they're no longer favorable, or if they make a demand that I don't like, I can always take the cash value that I have in my personal bank and pay that off. And now I'm in the same situation that the people that were thinking the other way, I'm in their situation now. In the meantime, though, I was saving 3% interest on the money that I borrowed. So I didn't lose any control. Sure, there was more stipulations. I had to qualify for credit. I had to ask for that from the bank. I had to make regular payments. Yes, those were all part of that, but that didn't take me out of control because I was still in control of enough cash value that I could pay that off at any given time. Being a good banker doesn't mean you have to borrow from your insurance company against your policy. That's not what that means at all, okay? And for some reason, this message is out there and people think that it has to be that way. I know part of the idea is you want to get banks out of your life. A bank is just another lender. If you want to use leverage in order to maximize your cash flow, in order to maximize your investments, then you're going to use lenders. And it really doesn't matter if you call it your own bank or a different bank. Which one is providing the product that's going to meet your needs best? For some people, that's going to be within your own bank. So if you can't qualify for a line of credit for some reason, you can create your own line of credit by having an infinite bank policy. And you can use that like a HELOC. The only difference is it's not quite as liquid. You can't get to that money quite as quickly as you can a HELOC. A HELOC, you can get to that money in seconds and do a transfer. Your infinite bank, you probably have 2 days before you can get to the money. So these are all things to take into consideration. And as a business owner, as a banker, you've got to make those decisions as what's going to work best for you at the time you need to make that decision. The myth that I'm trying to bust is this idea that in order to be a good banker and in order to be in control of the money, you need to be pulling money out of your personal bank. And that simply is just not the case. So I hope this clears that up for you. If you have any questions or if you want to have a chat with me, go to my Calendly link. It's calendly.com/cashflowpro. And we can have a 20-minute conversation. I don't charge anything for that. You're also welcome to leave any questions in the comment section below. I'm happy to answer them or turn them into a video response. Now, if you want to find out more about infinite banking loans, check out this video here. Thanks for watching. Now go maximize your cash flow.